following content is an update and technical analysis on crude oil, West Texas Intermediate futures based upon the daily interval, in which I will additionally cover the outer layers, much larger picture of the monthly time frame, then ultimately on an ultra zoomed in phase of the hourly time frame, in which I see some significant developments. And on the 5th of December 2023, we're trading spot price 72.37 a barrel, in which I had made clear that we had breached a critical inflection point based upon a huge data release off a huge Cushing build, ultimately snapping this primary reactionary uptrend line based upon the March reactionary lows. And it had just a plethora of major reactionary lows across that build. Snapped it. We took that key inflection point out, and upon revisiting and or having a small counter trend snapback rally, it was time to scale in and short for a much larger move to the downside, reflecting off the 72.70 price resistance, call it a dual line, on a potential move right back down to the 70.09 price support, ultimately undercutting that key inflection point. And I had raised the odds that we would tap the 50-month moving average, and it would increase more than likely the odds of a snapback counter trend rally and what would be a false breakdown bear trap right back into that key inflection point. And here's the update. And upon zooming you in to the 72.70 price resistance, really to the button, counter trend had that snapback and or counter trend rally right into that price resistance, especially if you're an active and or day trader, right to the bottom of that key inflection point. That was good for a 5.3% crash to the downside, ultimately having this beautiful counter trend snapback rally right back in, netting you in another 4% in gains upon reversing and having a long trade, great risk reward setup upon that 50 monthly moving average. Well, we had some big headlines rock the crude oil market space. As soon as we tapped that 50 monthly moving average, the Department of Energy under Biden had announced plans to acquire 3 million barrels for the Strategic Petroleum Reserve in March, amid a 7-week consecutive drop here in oil prices, where, in my opinion, the decline has more than likely raised concerns about a potential repeat of Saudi Arabia's 2020 COVID flash crash strategy to flood the market with oil to crush the competition of higher prices. And the recent increase in oil prices following a 3 million barrel purchase over a month highlights the delicate balance as the Department of Energy, aiming to avoid impacting fuel prices heading into the 2024 election year, may reconsider future refills. That is a 4% big move to the upside. And additionally, tensions are beginning to rise between Venezuela and the multi-billion barrel reserves in Guyana, where the charts undoubtedly manufactured the headlines. And zooming you out to the monthly time frame, here was that key inflection point, and you could tell really to the button. Beautiful snapback counter trend rally upon revisiting the 50-month moving average. And it was another dimensional inflection point that had to have been back tested and or retested. And I believe that's when the Biden administration came in full force with Jennifer Granholm to buy the dip on the price of oil to reflect that key inflection point. I believe they're getting close to being done with that. Where do we go from here? We could have a ultimate snapback and or counter trend rally right back into that 72 range. Long traders, bull traders, they want to hold on. They're setting some stops below this inflection point on a revisit of the 72.70 price resistance, and then ultimately the neckline or bottom of this primary reactionary uptrend line. They want to ultimately take that inflection point out to re-challenge the parabolic downtrend line based upon the October major reactionary highs, to have any sort of sense in putting a bullish green infused candle solid close up above, breaking out, and usually with parabolic downtrend lines where the odds increase of a parabola big inspired, highly energy infused move to the upside if and when we go upon revisiting some of these key junctures once again. Ultimately, short sellers, bear traders, they want to see a complete rejection upon revisiting this triple line transitioning point of resistance, ultimately going on to revisit right back down below that 70.09 price support, and then ultimately taking that level out to go on to re-challenge its 50-month moving average. The multi-forces, I believe, volatility is coming in both directions. And upon zooming you in to the hourly interval, we have very significant developments within the price action of crude oil based upon this primary reactionary downtrend line, major bullish falling wedge pattern with a nice clean divergent low. We have positive and or bullish divergences really constructed on all 4 technical momentum indicators with a confirmed breakout upon this inflection point, backtested the 50 hourly moving average and has been off to the races on a retap, revisit, rejection of the 236 fibs retracement. Ultimate line in the sand, in my opinion. Call it the 71.35 price resistance. Long traders and bull traders want to see a solid hourly candle infused close above that key transitioning point on a revisit of the 72.63 price resistance, the 382 fibs retracement 72.93, and then ultimately a reflection off the 50% fibs retracement 74.21 and the 618 fibs retracement, where you'll have around the $72, $73 range. You will have the parabolic downtrend line taken out if and when we can take that key inflection point out, especially for those who took the breakout or had a revisit long trade set up upon the 50-month moving average. And upon taking out the $72, $73 range, call it the 382 fibs retracement and the daily interval parabolic downtrend line, you'll then experience several interrelated time dimensions, and disrupting these correlations could significantly enhance the likelihood of a substantial upward movement.